Hello everyone. In Go Woke Go Broke news, the New York State Pension Fund is selling its share in energy companies, and to be more specific, shale companies, to commit to low carbon emissions. Now, why I say this is a situation of go woke go broke, because I believe energy prices are going higher, especially with so little investment done in conventional energy sources, and this ESG movement will ensure that oil prices and conventional energy prices, whether it is even gas and stuff, will remain higher in the coming years. In fact, already a lot of analysts are predicting oil and gas, or oil at least, will touch $200 a barrel in coming years. These are all just prediction and remains to be seen. But one thing is for sure, that energy prices are potentially will be higher because of so little investment done into maintaining the current output. And the existing oil reserves have also depleted significantly. So both cross currents are in favor of higher energy prices. And at such a time when they can be a money mentor for state pension funds, which are already suffering because of the low yields in all the different asset classes that they get. Why would they will make such a decision at this critical juncture is kind of mind-boggling. But hey, you know what? That's why go woke go broke, and it will eventually bite them in the behind. And any such decisions taken by other companies will actually bite them in the back, not just the state pension fund. So yeah, let's go through this article and see what they're up to. It was reported yesterday that New York's state pension fund is going to be selling 238 million worth of stock and debt that it owns in 21 shale companies, because they have not shown that they are ready to move to low emissions economy. So yeah, the New York State Pension Fund wants to be not appear that they are not for ESG, and that's why they are making this decision. Energy has been by far one of the best performing sectors of market over the last 18 months, and it seems it will continue to be so. And New York Comptroller Thomas DiNapoli commented, to protect the state pension fund, we are restricting investments in companies that we believe are unprepared to adapt to low carbon future. So they don't want to be associated with these companies, and these are some of the names that they will be dumping shares. In other words, to protect the fund, we must destroy its returns. That's what the kind of world we live in now. Meanwhile, back in real world, we reported yesterday that high-cost shale production is once again ramping up to meet demand for oil prices over $90. So at the time when the shale companies will be returning really good return on investment, they are planning on dumping them. Fund would sell 7 million worth of securities in Canadian oil sand companies as well. So they will sell Canadian oil sand companies. Now, 238 million is not a lot of money for 280 billion pension fund. So I absolutely agree with that. So for them specifically, it may not be such a big deal, but the idea is the key, because this is exactly where all these companies are going toward this, so-called support for ESG, cleaner energy and sustainable energy, whatever that may mean. I don't think it's sustainable if they just shut down these conventional sources without having non-conventional sources of energy readily available, and to be able to supply energy in the quantity as well as with reliability. So I think both of those criteria cannot be met. So neither the non-conventional sources are going to be reliable, nor they will be available in the quantity enough to meet the demands. So the report says that while the 280 billion New York State Fund is not a major holder of shale companies, its investment cues are often followed by other institutions, and that's the key. So yeah, I think I'm going to maybe start a series, go woke, go broke, uh, because I foresee there will be a lot of such crazy decisions will be happening in future. So anyway, that's the news, and I will see you in the next one. Bye.